Hello traders, Nick Shaheen here. Doing a quick video because markets are in turmoil. I'm starting with a weekly chart on the S&P futures contract, so think SPX, and it shows that clearly the bulls are still in charge. Yes, we've had a terrible week. Yesterday's down open was like the third biggest. I don't know if they count points or percentage, whatever they're counting. Anyway, it's big. The dip is big. Today, we had a rally overnight. It faded, and now it's another down day. 1.5%, 1.4%, depends on the index you're watching. So this is a time where I'd like to sit back and see what's going on and if there are any opportunities. First of all, I don't listen to the news and the headlines and the coverage, for example, on CNBC. Not to pick on it, but the whole industry, the media, they're in the business of covering something fantastic. If something is boring, they won't cover it. They won't get the right eyeballs. So any headline you read is most definitely exaggerated. The point of it is to grab the eyeballs and come watch. I contend that it actually set up well for them. It's orchestrated. For the last 2 weeks, nothing has changed. We've had a ramping virus. It's killing people all over the world, and they can't stop it, correct? It spreads fast. And nothing has changed. But CNBC had, for example, Warren Buffett scheduled for Monday. Today is the 25th, I believe. So Monday the 24th, yesterday. They had him scheduled for a couple of weeks and advertising it. So they ramp up into it. And you can totally tell from Wednesday, Thursday on, last week, Pisani and most definitely Kramer, they build the tension and the fear for the Monday open. And what happens? Boom, they got what they wanted. The Monday whoosh, everybody's scared shitless. Whoops. And everybody's buying puts. Who's selling the puts? Market makers. Guess who's going to win that fight? Not the retail buying the puts in panic. Okay, so having said that, ignoring the news is better than listening to it and acting on it. How about that? Okay, so, but in order to do that, I need to know charts. And this is the chart, and this is a weekly chart, so it kind of like eliminates a lot of the noise. And I can see clearly that we are at a level where we bounced before. So it should hold until it's lost. I assume it's support until it's lost. That's what I should say. Even if it falls, I see another couple of levels, which is one is around 31.20. Let's round some numbers. But there are some other levels in between, like 31.52, 53, 51. Let's call it 31.50 for round numbers. It's pretty significant. That was that candle right there. Long tail means they reject. These are weekly candles. So let's go down to the daily. I'm going to drill down and see if we can get smarter and smarter. Now, these are the same levels I was talking about. Let's see if I can find a 31.50. Somewhere on there. Okay, and another pivot clearly I can see is right here, right? So if the what hits the fan, 30.50, you're like having sweats right now because I'm saying 30.50. But if we go back to the weekly, it's not that big a deal. The bulls are still in charge. Higher lows, higher highs inside a channel. The bulls are in charge. Is there risk? Of course. For the last 2 weeks, we've been saying, how are they ignoring this? The news, for the last 2 weeks, they were ignoring the virus, or the 2 weeks before they started talking about it. And we set new highs, and my note was to lighten up and start some bearish trades to balance out any longs I might have. And so yesterday wasn't so much of a bad day for us because we were biased short, but they were ignoring the same thing. Nothing has changed. We still have a ramping virus that's killing people and they can't stop it. Nothing has changed. Coverage has changed. Sentiment has changed. Sentiment is dangerous and it will bring down the market like they did 2018. The Christmas correction right here. But the difference is the Fed. In 2018, the Fed was combative. And then they decided, nope, we're on your side. And they put out the net. And that's the same case here. I'm going to say it in a crass way. More virus equals more stimulus. The governments are going to throw all they can at it. And I'm talking China, Europe. I don't know what, the replacement for Draghi. I don't know her very well as far as actions. I've seen her, Christine Lagarde. Will she have the same gonads as Draghi? We will do more. So we'll see. But the Fed is committed, and we're not talking fiscal spending here in the U.S. China does a lot of that. Fiscal spending different than monetary. Monetary is what the Fed does, controls the flow of money. It lowers rate, starts selling stuff, bonds, buys bonds. It depends what it needs to do, shorten the money supply. Versus fiscal spending is when the government decides to do like cash for clunkers. Can we build some bridges? Can we do this to get people working? But we are at full employment. We're not going to go into recession at full employment, or it's pretty hard. So it will take a new shoe to drop. Like if the kill rate is actually 20%, not 2%, like China has been telling us, now is our time to find out, because the infection rate is outside of China, and now we can get honest numbers from other countries. Like Italy can report, okay, we have 100, 15 died. Well, that's not 2%, okay? So I'm not saying that's what it is. I'm just saying that these are the things that could change the game. Back to levels. So why are banks falling? XLF. The banks are falling not just because the stocks are falling. What's adding to the problems of the banks is the falling yields. So the TNX is a representation of one of them, the 10-year note. This is very concerning. Technically speaking, this brings negative rates. Okay, so if I'm looking at a chart and it's breaking an inverse cup and handle like this, it's going to less than 0 because it has to drop this much below, and it's already at 1.3. So this shouldn't happen. They might not let that happen. Okay, but when this falls, the perception is that banks make less. A bank needs to make money on the difference between what it borrows money and what can lend it. They borrow short term. So if the short term is yielding less than more than the long term, then they don't borrow the lend because they're going to lose money on the deal. So that's why, for the perception perspective, falling yields cause the banks to fall. So banks like Goldman Sachs, for example, is falling. I wanted to short it. I chickened out. Here's the line I had drawn for it. All right, let's reset it. Okay, there we go. On a daily chart. So I drew this ghost pattern, but I chickened out because of its deal with Apple. It's an unknown, so I didn't have an edge. I should have shorted. But anyway, JP Morgan, at this point, I don't short it. Let's go back to it. I don't start shorting here because it's a pivot. That's where it broke out last. So it should provide some support. If it doesn't, there'll be another leg lower. JP Morgan, same deal. This is a support level 1 zone, support level 2 zone. So if I'm panicking out of JP Morgan here, I probably should wait a couple of ticks to see what happens. But, the whole market is falling. I don't trust upticks in markets like this. As long as the VIX is this wild, upticks are usually sold until they show a trough. So until I see a clear trough, I don't trust upticks intraday. Let me show you what I mean. If I go to the S&P, and let's go to a 60-minute chart. So maybe 5 minutes will show it. Any little upticks are liars until I show a clear higher low, higher high trend that breaks levels. This one came into a level and failed. So uptick, I don't trust it because VIX is still rampant and they haven't showed me that they can hold the floor. And sure enough, they are going lower and lower. Now, I could argue that, okay, the relative strength is getting a little better as prices are falling, so maybe some divergences there going on. But I still don't want to anticipate. If I'm long, I don't add to my pain right now by, quote, averaging down intraday. Okay, so if I want to bet long, I better know levels. So I need to zoom out a little bit. 2 hours is not enough, 4 hours is not enough. So let's go to a daily. There are a lot of lines, but trust me, they all mean something. So I'll take them out. This was so this is a ledge that served as a base. By the way, the whole 2020 rally is gone. So now we're talking Christmas. We are right there in this candle right here from December 12th. Okay, so this was a nice squeeze, higher low, neckline, boom, served as a big rally. So if I wanted to catch a falling knife into a neckline like this, I'm not crazy. That's how the supports work. They go back to, okay, last time we were here, we rallied this much, so maybe I'll buy it again. I'll try my shot at it. So here's the problem. We had leaders, Momo stocks, Tesla, Roku, momentum stocks, like stocks that get up and shop. So that leadership group is lost, right? They run fast up and down. That's pretty scary. When they're falling into an abyss. Nobody wants to catch them. And when they're rallying, they feel like they're going to correct all the time. So they're hard to trade. That's gone. And then we had the chip sector, SMH, for example, Micron, all of that. That was also going bonkers. So today they downgraded Micro and AMD and NVIDIA, Micron and NVIDIA. So they whacked them by the knees. So that leadership is gone. So they're selling this to buy what? Usually they roll into something else. So they need a leader. I vote for Apple. Okay, here's the thing. Apple. Strange thing happened yesterday. So yesterday, I totally missed it. A friend of mine also missed it. I'm sure you missed it. Maybe not, but I definitely missed it. Sorry about that. I brought it from a higher res monitor, so shoot. Okay, there we go. So yesterday's open with Apple was a flash crash down to 289. Guess what happened today? Bleed down to close to it, 290 and change, an immediate rejection. So if Apple can do this and get above this and recover to close anywhere near zero or even green. Now this is a big if, right? Then you have a leader trying to lead. There's going to be a big ledge right here, and there's going to be a big ledge right here. That's a point of control for the day. This whole area is going to be resistive, and they're battling their way back in it. But they need a leader. So they lost 2 sectors. So they need a leader. I think Microsoft was green today, or greenish. Yeah, it's still green. There was another one. I can't remember which one. Google? Okay, it let go. It was green earlier. So the big cap, they are falling into some pivot zone support, but they're still expensive. I mean, we're barely off the all-time highs, you know. So there is definitely more froth to shed if they want to. But where's the incremental reason? So the headlines. So now we're going to get reports from Italy. We're going to get reports from all over the world that things are crappy, even Iran, the Middle East. I mean, I used to live in the Middle East, and I didn't encounter a lot of Asian population there. So it must have been through travel, somewhere, interaction, business, or whatever, and they brought it back home. So all these reports are going to come out, but it's the same problem. It's not like new problem. It's just the same problem. A virus that's creating uncertainty. The uncertainty that we had 2 weeks ago that it was going to be bad on the P&Ls. In fact, if you go to Twitter, you'll probably see me post it. There will be hits on the P&Ls, and they will be massive. You can't close the biggest country on the planet and the second biggest economy on the planet for months and not feel it. So whoever thought that this was just going to pass, they were just wrong. And the media didn't do anything about covering that when it was completely obvious to everybody else. They did it when it suited them. How does it suit our programming in order to get the biggest bank and viewership? That's their primary goal. And it kind of like confuses people. That's why I say, do your own homework. The news, you know what the news is. Just don't buy into the coverage. Get the expert numbers, get the opinions, read it, watch it. I don't let it cause me to act because of what they think. Like if they tell me buy this or sell that because of this or that, you would have sold everything when they said the recession is coming when, quote, the yield curve inverted. But, you know, here's the yield curve. Get ready. They're going to start covering it. So I drew, this is the time when they freaked us out that it inverted, right? Inversion meaning going under 1. What is this? This is the 10-year versus the 2-year. So if the 10-year interest rate is higher than a 2-year, it's over 1, correct? So everything is hunky-dory. But if it inverts, it means borrowing money short-term is more expensive than long. So if you go to the bank and you say, lock my money for 2 years, they give you more interest than locking your money for 10 years. It doesn't make sense. Remember the old CDs, the longer, the higher the interest? Well, if you invert it, then the banks say, I'm not going to lend anything. That's the concept. So if this bounces and comes back and loses this footing, we will come back to talking about yield curve inversion. So when they're done talking about the virus, they're probably going to revive that and have markets in turmoil day. But if you know, I'm covering a whole bunch of concepts, but it's a whole bunch of topics, but it's all the same concept. This is not the end of the world. We have a big problem on our hand, but the problem has been here for weeks. And just now the headlines are hitting it, so it's affecting the prices, sentiment. So everybody in this world is buying into fixing the sentiment. China is going to spend all it can in order to stay positive on growth. It's going to be scary when they show us their GDP, if they let us see the real GDP number. The U.S. is committed. Europe is committed. Don't know what Christine Lagarde is going to do. So Europe is the scariest thing because it's a tiny place, really, and they're all connected. So if the virus starts spreading, and even though they're one unit, kind of, they're individual leaders, so they might decide to do different things and panic against each other. So that is headline risk, but it doesn't change the fundamentals a lot. So this is a short-term tizzy. And if I was, trading, what did I mention? Shopify and Roku. So Roku, I did a video on it, and there are clear levels. And I said, if you lose this, you're going to have the 115. If you lose the 115, the 100 scenario is coming into play. And if you lose the 100 scenario, we don't want to talk about it. But there's a potential. So not the end of the world. This is not the place I start shorting things. This is a place I start seeing, how can I catch this falling knife carefully. And if I do, I don't go all in. So today I talked about trade in Amazon, for example. What about a trade in Amazon that leaves a 30% buffer zone on the downside? And if I wanted to also short it at the same time, a 50% upper buffer for shorting it, and then creating $30 per contract out of nowhere. So you can do stuff like that. All right, Nick signing out. Long video, but I think it needs to be said. The typical media doesn't give this type of stuff that's, Main Street crap. I'm not a Wall Streeter. I know how to read charts, and I can use concepts and logic to know what works and what doesn't work. So everybody loved NVIDIA or Apple at 330, and now they want to panic out of it. Somebody downgraded NVIDIA today. Why couldn't they downgrade it 10% earlier? Now it's 20% down. And this line is looks like a monthly line. Oh no, I guess a weekly. Okay, so this has been a neckline for a while. They burst through it, and now they come back to test it for footing. I don't like NVIDIA this high, but that's my personal thing. If I wanted to bet on any, look at that better chart, on any chip, it would be AMD. AMD has been the best S&P chart stock overall. 2 years back to back. That doesn't happen, people. This is the champ stock. As long as Lisa Su is in there, Wall Street loves it. And that's all I care about. Whether I love it or not, it's too freaking expensive for my taste from the PE perspective. But I think price to sales is not that crazy, if I remember correctly. Versus NVIDIA is the opposite, where it's not as expensive PE, but price to sales was hideous. Yeah, so 8, 9, 10%. 8, 9 times the sales price of the stock. Intel is the cheapest, but probably for good reason. Intel is also falling into support or pivot point. Yeah, 16 times sales NVIDIA. So there's a lot of froth to shed NVIDIA. So this is a good candle, weekly candle. It's still, they're undecided, right in the middle of the range. They tried to rally, they tried to fall, but they're right in the middle of the range. So we'll see what happens there. All right, next signing out.